大家好，我最喜欢的汽车公司 Stellantis 刚刚发布了它3季度的财报，所以我们呢先听一下它电话会议，主要是 CFO 的访谈。然后呢，我会讲一下我认为电话会议里面讲的比较重要的几个地方。明天我可能在会员视频当中讲一下我对这家公司未来5年的估值，为什么我很有可能会在最近就会买它的股票。那我们现在听一下它电话会议的内容。
Thanks, Ed. I'm excited to be here with everybody today and talk about our strong Q3 performance. This was a period where net revenue growth and continued shipment momentum really shone through. We also took on critical short-term industry challenges like the union negotiations in North America head-on and made strategic moves that demonstrate we are clearly on track to achieve our Dare Forward 2030 ambitions. Let's now turn to our first chart. At 1.4 million units, Q3 shipments grew 11% year over year, and our net revenues increased 7% to 45 billion euros. This development was supported by our unique, high-performing third-engine markets, where revenues were up 25% year over year due to the share gains in both South America as well as the Middle East and Africa. Our efforts on electric vehicles also continue to accelerate. LEV sales grew 50% in the quarter, and we moved back into the number 2 position in BEV sales in the Europe 30 markets, regaining that spot that we had lost to Tesla in Q2 and setting ourselves up to finish the year and enter 2024 with strong momentum. This is especially exciting because of the significant expansion of our electrified offering next year, including, for example, the all-new Citroën EC3, which we unveiled 2 weeks ago. Arriving in Q2 2024, this car, which is pictured here on the chart, it looks great, it meets industry expectations on all EV performance metrics, and it's a leader when it comes to the all-important affordability criteria. At 23,300 euros, we are the first major car maker to offer a BEV in Europe, which is manufactured in Europe, at a price below 25,000 euros. And towards 2025, we'll break the next price threshold with our urban variant, calibrated for lower range needs at just under 20,000 euros. The launch reception has convinced us that there will be strong demand for this product, and let me add that I think these vehicles, in fact, I know these vehicles are going to be profitable from day one at Stellantis. Earlier this month, we also presented 2 major building blocks to our Dare Forward 2030 plan, with the announcement of our new strategic partnership with Leapmotor and the launch of our Pro One commercial vehicle strategy, each of which I'll discuss briefly today. Another very important topic to address is the labor negotiations with our North American workers represented by the UAW in the US and by Unifor in Canada. The combined negative impacts of our shipments from both of these strikes was around 50,000 units in September and October, with an associated net revenue impact close to 3 billion euros. We're very pleased to have reached a tentative agreement with both UAW and Unifor in the last several days, but that also means we're limited in our ability to provide additional details at this time out of respect for the remaining steps, as the union leadership teams are now in the process of communicating details and putting ratification decisions to their members. Let me now turn to market share, where overall performance was lower in both of our largest markets versus the year-ago period. It's important to note, however, that in Europe, our market share grew in the month of September, and that's momentum we expect to build further in Q4. While in North America, we continue to focus on improving our sales and marketing effectiveness and optimizing the mix. The next chart is about our commercial vehicles business, where we recently launched our new Pro One multi-brand plan of attack to obtain market leadership. CVs represent 1/3 of Stellantis revenues, and we have regional leadership in Europe and South America with strong positions in the Middle East and Africa, as well as in North America. We have been producing commercial vehicles for 120 years, the loyalty rates are sky high, and the profitability exceeds our already high group standard. To keep pushing forward, we presented a full renewed lineup of not just one, but 12 vans, each offering BEV variants. Adding to that, we will be launching 4 Ram electrified vehicles in the next 24 months, starting with the Ram ProMaster later this year. Our entire CV offering will also be fully connected in terms of software by the end of this year, and we intend to double our CV net revenues by 2030 versus 2021 and generate 5 billion euros in CV software and services. As a result, we're now targeting the #1 position in commercial vehicles by 2027. That's 3 years ahead of our original Dare Forward 2030 ambition. I'd now like to turn to our announcement from last Thursday about our exciting new partnership with the Chinese EV pure player, Leapmotor. We will invest 1.5 billion euro to acquire a 20% equity stake in Leapmotor and are setting up a Stellantis-led joint venture, which will hold the exclusive rights to export and manufacture Leapmotor products outside of China. This will help us move into an offensive position where when it comes to the strong secular trend of rising BEV exports, which are projected to more than double in terms of sales outside China by 2030. At the same time, we'll be participating in Leapmotor's impressive growth story within China, with being part of that elite group of tech-led local NEV pure players that we believe will belong to the long-term winners in the world's largest car market. Lastly, we believe this partnership will provide outstanding real-time insights for our core business based on the dynamic, highly verticalized Chinese EV ecosystem that we can use to benchmark and challenge our core Stellantis business to innovate and win in new ways. We expect to be in position, pending regulatory approvals, to start shipping from our new export JV Leapmotor International in late 2024. And in 2030, we're targeting more than 500,000 units of annual export volume, on top of Leapmotor's own goal to have at least 1 million units annually in their domestic Chinese market. This partnership will play a key role in the Stellantis growth story, but at no expense to profitability, where this deal will be accretive to our AOI in 2025 and enhance our margins in the longer term. Turning now to our key financial figures for the period. Shipments increased 11% in Q3, and revenues grew 7% to 45 billion euros, as I mentioned earlier. This continues our strong year-to-date trend. As you can see here, negative currency translation effects dampened this performance, but the underlying trends are strong. In the third quarter, we added over 3 billion euros to the Stellantis top line, thanks to strong shipment growth and carefully calibrated pricing, which helped us to offset nearly 3 billion euros of negative FX impacts. The very strong performance of our third engine contributed more than 50% of our revenue increase. So now let's briefly discuss the shipments and revenue performance by segment on our next chart. In both North America and enlarged Europe, higher shipments plus modest pricing gains drove solid net revenue growth. The Middle East and Africa was again our strongest growing segment, with shipments passing the 100,000 unit mark to more than double last year's volume, as we continue to benefit from our unique leading positions in Algeria with the successful introduction of the Fiat brand, and in Turkey with our powerful Peugeot, Opel, and Fiat brands. Net revenues in the region grew even more, with a 128% increase to reach 3 billion euros, helped by positive net pricing and also benefiting from hyperinflation in Turkey. Looking at our next chart, where in South America, shipments and revenues grew 7% and 8% respectively in Q3, the positive net pricing more than offset negative FX impacts, particularly from the devaluation of the Argentinian peso. Lower shipments in China, India, Asia Pacific led to a decrease in net revenues, and in line with the trends of other Western car and luxury brands in China, Maserati also experienced lower shipments against the prior period. Turning to the next chart, I'd like to comment on our new vehicle inventories, which were virtually unchanged versus Q2 levels when we last published these results. Global inventories have remained stable at around 1.4 million units. However, this hides an improvement in Europe, where our outbound logistics are continuing to improve, allowing us to reduce inventories. This improvement was offset by slightly higher inventories in North America, given that we had prepared our inventory levels for potential strike scenarios, which would have impacted production even more than what we ultimately experienced. In terms of global inventory mix, we were able to reduce levels held by independent retailers to around 1 million units, while company-owned inventory increased 68,000 units in line with seasonal trends. Looking longer term across 12-month intervals, you can see that we are now at a more normalized level compared to the highly supply-constrained 2020 to 2022 period, and have significantly tightened our inventory levels versus our pre-merger predecessors, as the decline versus 2019 shows. And finally, in this section, let me touch on our order book, which has moved from 4 months at the end of the second quarter to around 3 months at the end of this period. This is right where we always want to be because it allows us to have solid revenue visibility, but we're also improving our ability to serve customers in a reasonable time frame. Moving on to our outlook and guidance, the industry continued to show strong overall demand in the third quarter, leading us to raise our full year 2023 industry outlook in 3 of the 6 regions. And we exited Q3 with confidence in our continued strong revenue performance, progress on strategic objectives, and short-term industry challenges. As a result, we're confirming our financial guidance, where we intend to deliver double-digit adjusted operating income margin, both in Q4 and for the full year, and the positive industrial free cash flows, which, given the strong starting place in terms of H1's 8.7 billion euros, easily puts us within reach of 2022's 10.8 euro mark. Our focus between now and the end of the year will be on finalizing North American labor contracts so we can restore full production capacity. Also, it'll be about building momentum in BEVs, particularly in Europe, where we intend to maintain our top 2 standing. And finally, when looking at sales performance more broadly, we intend to drive further efforts to in each of our key regions to improve share and do so while maintaining strong profitability. Let me close by looking forward. In addition to our full year 2023 results on February 25th, we're excited to announce that we'll be hosting a 2024 Investor Day on June 13th in Auburn Hills, Michigan. We will be sharing more information on the event in early 2024, but we're looking forward to covering a wide range of important topics, so please save the date. Now I'll say thanks for listening and hand back over to the operator so I can take your questions.
Thank you. Ladies and gentlemen, as a reminder, if you would like to ask a question, please press star 1 on your telephone keypad. Thank you. And we'll now take our first question from George Galliers at Goldman Sachs. Your line is open. Please go ahead.
Hi, Natalie, and thank you for taking my questions. Just being respectful of what you said around not being able to disclose too much detail on the UAW negotiations, I wanted to just start by asking whether high level you could give any indication of what the anticipated headwinds will be for you from the higher labor contracts as we think about 2024, and also whether you could give any insight into the cost of the signing bonus and whether that would be accrued over the life of the contract or booked to the second half of this year. The second question I had was just with regards to the development of the revenue per unit in the Middle East and Africa. If we look at this, there seems to be a lot of volatility from Q1 with a big drop at Q2 and then another large step up now at Q3. can you give us some insight into what's driving that? Is it product mix or regional mix? And how we should think about that going forward, given this is an increasingly large part of your business? Thank you.
Sure. Thanks for the questions. We start with UAW. I mean, maybe getting some things out that I also said in the press call earlier today, which is we go into that position, I think in a very healthy space versus the competition. On the one hand, the U.S. market, it's very important to us, but it's a smaller piece of our overall business than what you see from our U.S. competitors. And it's a place where we start with a very high and healthy profitability level. When we look at kind of where we've ended the negotiations, I talked about the number of shipments and about the $3 billion in terms of revenue hit that we've had this year. What I did say this morning on the press call was that when we look at that from an AOI perspective or in terms of margin, that number is less than 750 million euro, and we also believe it's the lowest of the big three in the market. So that's just kind of getting to where we are today in terms of impact. When we look at what does that mean in terms of 2024 and beyond, and your question about the ratification bonus, I'm not going to make any specific comments on those numbers because I do want to respect the process. And, I think our peers have also let UAW go through the process of talking with their members and our employees first. But what I will say is you can expect those numbers to look very much in the same order of magnitude as what you've heard Ford comment on in terms of their numbers. In terms of the signing bonus and how it would be booked, that's definitely something that you would see us look at this year in terms of going through our AOI. So that's a very standard piece in terms of the accounting treatment. When it comes to your comment about the revenue units on Middle East and Africa, this is one of those things where we have a very different mix impact depending on the different countries. We're not selling our products at the same price in all those countries, so it really depends on the macroeconomic situation in each country. So in our country mix, as we see that change, then we also see the changes directly in the revenue. So it's important at the end of the day is we're really looking at the margins and how the margins develop. This year that we had big changes in terms of our growth in the Turkish market, and we've now had strong growth in the Algerian market as we've come online there. So it's really about the mix between how those countries are playing into the overall.
Thank you.
Thank you. And we'll now take our next question from Michael Jacks at Bank of America. Your line is open. Please go ahead.
Hi, good afternoon. Thanks for taking my questions. The first one, Natalie, is on industrial performance or costs for the second half of this year and into next year. I think the initial guide for 2023 was for industrial costs to half versus the 9 billion headwind from last year. But given that H1 was run rating well below that, that would imply an increase for the second half of this year. I would also expect that raw materials are becoming a tailwind and synergies are a tailwind as well. So would it be reasonable to expect a more neutral cost impact in the second half of this year? And how should we think about the setup for industrial costs going into next year? And then just an additional question on Middle East, Africa. I mean, it's been quite an exceptional period for you on volumes. Would it be fair to assume some degree of normalization here going into next year? Thank you.
Okay, quite a few things in there. I think the first one was just looking at, how costs are moving for us as a business. And this is one where I think you're right that there have been a lot of different moving parts in there this year. What we saw is that we have had some tailwinds on raw materials, and that's, I would say, accelerated a bit as we've moved throughout the year. On what we've been able to do ourselves as a business in terms of the transformation, that piece has also, I think we've been able to deliver some very positive benefits there. We do continue to see challenges on the cost side with our suppliers, but that is something that I think is actually moderating versus what you've seen, over the last 2 years where there's been a real big run up in that area. Synergies, as you called out, are also another important tailwind for us. That's something that is developed very nicely, and this year I'm confident we'll pass the 8 billion mark in terms of how that runs into our numbers. So that is something that is, I think that answers that question for you. TPC is also something that's very important for us in terms of that number moving in the right direction and everything we can control there. When it comes to the Middle East and Africa, could you repeat your question for me? It was something about volumes.
Yeah, I mean, we discussed in the previous question about price and mix, but obviously volumes have been a significant tailwind, a massive tailwind. Should we expect some degree of moderation here next year? Or, does your level of visibility suggest that this kind of volume level can be sustained for the next, say, 3 to 6 months?
Yeah, I think in terms of 2024 outlook, you can expect us to talk about that a lot more when we have the full year result. But it's really going to depend on, what's happening in the market conditions there. I think if you look at our business in the Middle East and Africa, we have some core things that are, going our way in terms of we have a very strong position in the Turkish market, and we've continued to build on that. We have the new entry into Algeria, which is something where we've got outstanding market share and really see continued opportunity. But there definitely is, these are all markets where there are higher volatilities, there are different macro things coming into play. So I'd like to be a little cautious about giving too much guidance on that until we get to our full year numbers.
Understood, thank you. And then just quickly circling back on the industrial costs, should we expect a headwind again in the second half of this year or a more neutral impact?
No, I think you should definitely expect a more neutral impact if you're looking at between now and the end of the year.
Thank you.
Thank you. And we'll now take our next question from Daniel Roeska at Bernstein Research. Your line is open. Please go ahead.
Hi. Good morning. Good afternoon. One question on the inventories. They've held largely steady, as you showed in your presentation from the first half, with a slight shift in the channel. May I ask about more medium term? How would you react with regards to midterm production volumes if inventories kept going up across your regions in the upcoming months? And then secondly, maybe a broader question, Natalie, could you give us an update on your agenda, other than the obvious hot topics of the day, more what you want to be more focused on in the medium term for Stellantis and where you'd like to leave your mark? Thanks.
Great, thank you. 2 questions there. The first one was on inventories, and I think this has been a topic, I know we've been getting some calls on it during the day, so maybe a little more color on that one as well, which is, if we look at the inventory levels, I think I called out in my prepared comments that we're very pleased that in Europe we've started to see things move the right way, that we've had logistics improvements. This has been a place we've been working on. We're starting to see that pay off. Conversely, that means that we still have levels in America that are higher than what we would like. And I think this is something where there is a piece that I commented on, which is, of course, because of the strike, we had been very thoughtful about how do we ensure we have the right levels to ensure that we give continuity to our customers. There were a couple other items that played into our inventory numbers when we look at Q3 that I do think, like the strike number, will abate as we go forward. The first one was really about planned downtimes that we've got in terms of our plant facilities. It was for the Challenger and the Charger at Dodge, where we're looking at getting those to be a more electrified future, and the same thing with our Chrysler Pacifica. So that's something that I think is very important in terms of just sort of understanding why we're there, and also why we believe we will see some inventory improvement as we go to towards the end of this year. And when you look at the question of more medium term in terms of how we think about it, well, obviously the inventories are going to depend on our sales evolution, how that moves, and our expectation is that we will see our sales improve. We have new models coming to market. We've got a lot of exciting product in terms of on the EV side in the U.S., and that's a place where that's what helps us to get our numbers where they ought to be in terms of inventory. And what we're really doing is we're thinking about constantly how do we optimize that day of sales figure It isn't where we want it to be yet in North America. And obviously, over time, if it isn't where it needs to be, then we'll take corrective action. But I do believe at the moment we've got a good plan in terms of the products, the flow of cars that are coming out, that we will be able to show progress there and feel confident about the development going forward. The second question you asked was about my medium-term agenda. Thank you. I'm thinking I've been 100 days or so in the role, so I still very much have that thinking cap on. And I think there are some different places where I have a huge passion in terms of how do we bring them into the business. Maybe first is like any CFO, I think we're drilled in our brains. How do you think about cost and efficiency and making sure that the business is where it needs to be? And we are in an environment where things are tough and they're challenging, and that's something that requires a lot of attention. So I think Carlos already has an outstanding reputation there as part of this business DNA, but you can expect that's also a place where I will spend time and energy. The second one is that I really look at our business and making sure that people externally understand the story, the red thread, what makes us special and unique, and also how does that translate into better comparability with our U.S. peers, better valuation for the business. I think this is really an opportunity where there's some low-hanging fruit in terms of how we communicate, what we communicate, that we help people make it easier to understand what is so great about this business and why we're very optimistic about the future. And the third one, which is something I care very passionately about, is around everything ESG. I believe we're in an industry where we're 25% of the global footprint when it comes to carbon, and where we have a unique opportunity to be part of the solution. This is something that I think only happens and only really scales up when not only does the whole business care about it, but also when the finance function is providing the transparency and really looking at the topics that will help drive the business forward. So that's definitely a place you'll also see my focus as we go forward.
Excellent. Can I direct your your view towards your balance sheet? I mean, if we look at what Stellantis has done over the past, let's say, if we take a long time period, like 5 or 6 years, right, the balance sheet has improved quite substantially. Are you kind of satisfied with where the balance sheet sits, or what are the areas you'd like to look at in the upcoming years?
Yeah, thank you so much for asking, because I think I got so excited about giving you those answers that I skipped the last one, which I know for many is probably very important, and that is obviously looking at how do we optimize where our business is and having an efficient balance sheet. So this is something where I think our business is known as being an outstanding operator, and I think that's something where we prove day in and day out that that's something that really matters to us. I think we are still a pretty young company, and so in terms of being able to go out and show shareholders, how do we move from maybe a safety-first balance sheet to an efficiency-driven balance sheet is something I think we can do better. And when we think about how are we doing, that's a complex topic, because one is getting, I think, stronger vision inside and outside the company on how and where we invest in the future, because this is an industry that's going to require making sure we make those good investments. But at the same time, I think we have the ability to be braver and even more thoughtful in terms of how do we look at making sure those the strength of our very strong cash generating machine is being put to best use, whether it's within the company or also with more directly with shareholder remuneration.
Great. Thanks, Natalie.
Thank you. We'll now take our next question from Jose Asumendi at JP Morgan. Your line is open. Please go ahead.
Thank you. Hi, Natalie. 2 questions, please. The first one on the launch of the C3 electric price below 25,000 euros. Can you explain a little bit what are the key pillars that allows you to make money with the car and close that margin gap between ICE and BEV? I mean, this is clearly, I think, one of the most important statements the company has given now in the past year. And second, With regards to BEV penetration in Europe and all your upcoming product launches, can you share a little bit your thoughts with regards to the BEV penetration ratio in Europe and whether you see that maybe on a 3, 6, 9-month view? Thank you so much.
Okay, let me talk about the EC3 because I share your view that I think this is a real milestone in the industry. And when we look at what's happening in the EV marketplace, I think this is one where our belief is very strong that you've got to win when it comes to both technology and affordability. And not only is it that we've got the EC3, but if you look at the Peugeot 3008, that's an example where we've brought out a product with 700 kilometers of range. So we are also looking at what does it take to have the best products in the market in terms of the technical prowess, all the things that people will expect. But when I think of the EC3, this is one that's so important to us because what it does is it really plays into that strength that we have as a company, which is about being able to come with products that are, I think, very approachable, affordable, accessible for consumers, and that's part of our big focus as a company, but also doing that at low prices. And what's allowing us to do that is really the platform thinking that we have as an organization. This is something where we're really looking at using those platforms across multiple energy sources, but then also being able to really use them successfully across our brands. We also, I think, are one of the industry leaders when it comes to sourcing, certainly amongst the Western brands, and that's something where we are efficient. We can always be better, but where I think we're doing a very strong job. And it also has to do with product definition, making sure that we really are looking at what exactly is the consumer looking for at those price points. So when we bring out the EC3 that's coming in the first quarter, that's one where we're doing a mid-range vehicle, and you'll see us, as I said, in 25 coming out with the shorter range, because that's something where we believe there's another critical price point that we can address that is going to be very important. And I'll take the opportunity also to lean over a little bit into Leap Motor. You didn't ask, but I think that's another one of the things that's a great opportunity for us, is not only are we now going to have a 15th brand that we can be using in markets outside of China to really come at that consumer who is looking for those competitive price points and wants the right technology and is excited about that kind of offering. But I'm also equally excited about the learnings we're going to get from collaborating with one of the up-and-comers in that Chinese ecosystem of everything around NEV, because it is something where we then have the ability to have real-time benchmarking when we think about what does best-in-class look like. And when we talk about our due diligence there, we did find that the price increases, the price differences that you see between Chinese and Western brands, they definitely exist. There's a lot of it is around the verticalization and how does that challenge us to think about doing that even better. But also there are other opportunities there, I think, where it's been an environment that's very focused on speed and agility, and that's something that will help us in that area as well. So long answer to a short question, but I think one where I hope that shows we're very motivated on this side. We know that the markets will do what the markets will do, but we believe if we've got the best product out and we are continually looking to how do we innovate, how do we accelerate, how do we focus on the affordability, then we have what it takes to be a winner in this space.
Thank you very much. The second question was in relation to, BEV penetration in Europe, whether you have a target or you see, how do you see the progression in the coming quarters, if there is a figure or a target behind that share of BEV. Thank you.
I'm sorry, could you just repeat? I couldn't hear the first word or two. You said something about BEVs in Europe?
Yes, well, the question relates around, what is your current share of electric vehicles within your product mix in Europe, and how do you see that evolving on a 6-9 month view? Obviously, with all these product launches you're going to have, your market share in Europe is going to evolve positively, or your share of electric vehicles within the product portfolio is going to develop also upwards. Do you have any thoughts with regards to that share of electric vehicles within the business in Europe?
Yes. I mean, right now it's around the 16-17% level, and it's definitely something that we're launching. We've got 28 BEVs out in the market globally, and we're planning to extend that market coverage and the market share when we look at next year. So I think it's about moving into the C segment SUV. So that's where you'll see us play a bigger role. And I think the next threshold for us as a company is how do we get to 20%? That's one of those things. It give us a little bit of time and energy to do that. But as a group, that's something we're very focused on. And I think that position for us of being number 2 in the market and overtaking Tesla was sort of an important psychological hurdle for us as a business. And now it's on to the next bigger and better things when it comes to Europe and EVs.
Brilliant. Thank you so much.
Thank you, and we'll now take our next question from Thomas Besson at Kepler. Your line is open. Please go ahead.
Thank you very much. It's Thomas Besson at Kepler. I have a few questions as well, please. I'd like first to follow up on the latest question. Could you please give us the units for BEVs and PHEVs for Stellantis in Q3 and year to date? And remind us what are the key launches for you in Q4 and in 2024? And confirm that the LEAP motor units that are going to be made by your joint venture and sold in Europe are going to be part of your total BEV units for CO2 calculations purposes? So that's the first question. The second question, much more basic. You show a pricing of about 3.5% in the quarter. Could you help us understanding what was the share of emerging market forex compensation within this, and what was the share of pricing as such? And lastly, could you talk a bit about Maserati's ramp-up? Volumes were softer in the quarter. A lot of products have been launched. When can we expect Maserati volumes to effectively start being a bit more sizable on a quarterly basis, please? Thank you.
Okay, thanks for that multi-pronged question. I heard 3, but I think there were 4 or 5 in there. Let me try. I will start, and I may do these in a little bit of a mixed order. When we start with the first one, was you wanted to know about BEVs. I think it was units in terms of, was it just Europe or globally? Was that?
It was BEV and PHEVs globally, please, for the quarter and year to date.
Okay. I think that's something, let me get back to you on that in just a second. You also asked about what was going on in terms of the launches that are coming. And that one, very excited to say that if we look at Europe, we've got coming still this year the Fiat 600e. And then as you go into 24, our Topolino is coming at Fiat in terms of January. And February, we'll have the 3008 CUV that I was talking about earlier. The 5008 SUV is coming in August, and the 408 will be coming in the fourth quarter. When we look at the U.S. market, you didn't ask, but I'll just throw it in because I'm very proud of the electric lineup we have coming there as well. There you see the Ram ProMaster that we've been talking about quite a bit, ramping up at the end of this year. And then as we look into next year, you'll see both the Wagoneer S SUV coming and the Charger Daytona EV. They're both around mid-year. And end of the year, you'll see the Recon SUV and the Ram Rev, or the 1500 as we lovingly call it. When you talk about the numbers in terms of what do we see in the third quarter, on the PHEV side, it's about 75,000 units. On the BEV side, it's 93,000 units. And when we look at the numbers of that year to date, it's we're approaching a number that's close to 200,000.
Thank you. And I was asking as well.
I'll keep going. On your other questions, I'm sorry, you had the next one was on pricing. I had written down, you were asking about the 3.5% and how much was emerging markets. And I think what you were trying to get at, probably in a nice, polite way, was how are we doing in the mature markets? And what you would definitely see there is that our net pricing numbers have moved versus a year ago very nicely. We've had the emerging markets, as you're right, are definitely the pieces that have led the way, but we have also had positive pricing increases in both North America and in Europe. Europe is pretty small, I'll admit, but in terms of the U.S. number, we've seen it at above almost 2.5%. So that's something that is moving really positively for us. I think you also asked about the Maserati ramp-up in terms of how that piece is going, and that's something where we're currently in the process of really growing those new products in the market. We've had good reception, I would say, to our new products in line with our expectations for this year, with the exception of what you saw in China. I do want to come back real quick to the numbers in terms of year-to-date, because I'm sorry, I misspoke on that. The PHEV number alone is 221,000, and the BEV number is 262. So I hope I got through all of them. Did you want to ask any follow-ups to any of those questions?
Yeah, I just had one more throughout, Natalie, please. On Leapmotor, I just wanted you to confirm that the number of units that will be sold by your joint venture in 2025 will count as part of Stellantis BEVs.
Yes.
Yeah, perfect. Thank you very much.
They will. They'll be fully consolidated in our results. What you'll see just in terms of the accounting more generally is that everything that's coming through the JV, because we have the 51%, will come in the AOI line, and we will, of course, take the minority piece out below. And in terms of the proceeds that we have from Leapmotor overall will come in that line as well below, but also contribute to our EPS.
Yeah, thank you very much.
Super.
Thank you. We'll now take our next question from Dorothy Cresswell at BNP Paribas Exane. Your line is open. Please go ahead.
Question. I have two left, and they're both in relation to the international joint venture that you've agreed with Leapmotor. So first, can I ask for how long the joint venture actually has complete exclusivity to distribute the Leapmotor products outside of China? And then I also wanted to understand in how far you can use the Leapmotor 3.0 platform to make vehicles for the other Stellantis group brands. Thank you.
Great. Thank you for that question, Dorothy. In terms of the exclusivity with the JV, we haven't released that number, but it is long-term in nature, so quite long-term in nature is what I would say. In terms of the utilizing their platforms, that is not part of the current arrangement. It's really focused on how do we help Leapmotor in terms of their business in China and exporting the products outside of China. One of the things, you're right, though, that we're very excited about are what are the opportunities for other cooperation going forward. So you've mentioned one example in terms of what could you do in terms of a technology or product point of view. One could also think about, are there things on the purchasing side? We've seen those type of arrangements in the industry. So this is definitely a place where we are going to let our creativity flow. This is an outstanding partner for us where we think we have a lot to offer them, but also a lot to learn. And I think you'll hear about it over time that we will become more ambitious in terms of what we want to do in our collaboration with Leapmotor going forward.
Very helpful. Thank you.
And we'll now take our next question from Henning Cosman at Barclays. Your line is open. Please go ahead.
Yeah, hi Natalie, thanks. It's Henning speaking. There were a few comments made on profitability in the second half, and if you allow me, I just wanted to perhaps consolidate that and ask your opinion. So I think in your intro remarks you said H2 also double digit. I think in the press release you were quoted as saying you're focused on maintaining momentum and delivering industry-leading profitability. I think you were also quoted saying that you will continue to cut costs to make up for the strike hit. So perhaps specifically on the industry-leading profitability, Mercedes did 12.5% in Q3. The company consensus that you had collected was at 11. So let me ask you straight up, would you agree that that seems a little bit low in the context of what you're thinking when we're consolidating all the statements that have been transpiring today? That's my first question.
Okay. On that question, I think the answer is the sum of the parts that you're bringing are correct. So when we look at this is something where we are very proud of this pole position we have in the industry of, the highest margin in terms of AOI and the strongest cash flows. And that is something we are very focused on. How do we stay in that top tier with our competitors? Because that's what we believe shows the world that we are going to be one of the winners in this market long term, and we know the steps and the smart ways to make that happen. So that is something that is very important to us in terms of how we move forward. You are also right that we are very strongly of the opinion that when it comes to looking at everything in terms of things that are unexpected, and the strike and the length of it was unexpected, is how do we find ways to mitigate those expenses? Now, obviously, the impact in 2023 is a significant one, and I don't want to suggest you'll see that fully mitigated in 23. But I think you will see big moves on our side. This is something that we care about, and this is what is part of our DNA. This is something we think shows how seriously we take the ability to bring affordable cars, especially as we move into a new EV generation, to market. So to your point about the 11% margin, and is that something that might be conservative when we look at it for the full year? The answer is definitely yes. We're not giving new guidance today. We're confirming the guidance that we have out there. But I think when you look at the pieces and you look at our performance year to date, you look at what you've seen in terms of the sales and shipment trends, I think you can continue to be very confident in our ability to deliver as a group.
Thank you. And maybe I can ask specifically about pricing and mix again as well, specifically for Europe and North America. But both were obviously positive again in the third quarter. Mix hadn't been positive at the half year point. Could you go into a little bit what you're seeing today? How's pricing? How's mix developing in the fourth quarter? October over now already. Where the directional ingredients of Q3 are they sustainable as we go into the fourth quarter? Thank you.
So I think what we see in the marketplace is that, things are toughening up there a bit. And it's also an environment where we know that versus the last year, you've seen prices instead of, we had big gains in 22. And a lot of our efforts have been about how do we hold on to those prices. And I think we've done that in a smart way. And it's something we're proud of the performance. And we've chosen at times to make market share trade-offs that were required to be able to continue to deliver that strong pricing. When we look at the fourth quarter, I think what you see is continued development in terms of what's happening. I think our growth will really be driven by volumes. Pricing, we think, will be largely stable. I think we feel confident that we're going to be able to control incentives at a good, healthy level, which is going to kind of be key, and one of the reasons we believe we can protect our profitability. So we do always have to be thinking about things like the mix is increasing in LEVs, and for the moment, even though those are profitable for us, they have a lower impact in terms of our overall profitability number versus ICE. So there are some mixed things that we're going to have to offset. But I think when we look at those four pieces, you can see volume being, the real driver, price continuing to be a plus, and mix having some positives and negatives in it.
Thank you, Natalie. That's great. So, sorry, just as you were talking, I'm getting just quite a few client questions. If we could please clarify. So my question was around consensus level in the second half, which I've calculated as 11% from what you had sent round. I believe in your answer you said full year. So can we just clarify that we're talking about the H2 level at 11% being low. That's what you meant, right?
My comment was about the full year, so it was said on purpose because we do only give guidance on a full year basis. But again, if we want to have a number above 11%, and if you look at the dynamics of our business, I think you can expect that we will continue to have quite positive trends in the second half.
Thank you so much.
Thank you. We'll now take our next question from Patrick Hummel at UBS. Your line is open. Please go ahead.
Yeah, hi. Good afternoon, Natalie. Two questions. My first one is on your EV investment plan. It seems like you're pressing ahead as planned with the launches, with your investment spending. Am I right with that conclusion? I'm asking, of course, against the backdrop of slowing EV demand in the Western markets and the responses of your Detroit competitors to push back some EV launches or also delay sizable amounts of EV-related capex.
Yes. So in terms of our EV investment plan, when we look at the next period, one of the things that we talked about with our Elite Motor announcement was that we have actually increased our guidance on what that investment is going to be. We now are expecting to spend 50 billion euros between now and 2030 in that spot. And our focus is obviously on making sure that we, have a flexible powertrain strategy so that we are able to, on the one hand, capitalize on whatever's happening in the marketplace. I think that's something, that we probably, came into over time because it was something where we were strong on the ICE side of things and we moved in a little later into the BEV side of things. But it's something that today is really important for us because we are growing very quickly in those third engine markets. And so that means we're always going to need to be able to have those kind of products that are new, competitive, and affordable. But at the same time, we want to be able to have the best BEVs out there. So the strategy is one that I really like because it puts us in a place to, on the one hand, be able to invest heavily in those technologies that are going to drive the future, but also give us a little bit of a safe bet if we see opportunities coming in the ICE segment that we don't want to miss.
But more precisely, for the next year or two, there are no shifts in investments to later years. Is that right?
There are no shifts in investments to later years. No, this is one of our biggest priorities. And when we look at this is something where, yes, you can definitely continue to expect us to be going full speed ahead.
And my second question then would be just in terms of the coming back to the balance sheet and what the cash is earmarked for. Your predecessor had earmarked a few billion euros that are required to build a FinCo. And he also set aside some funds for funding the negative working capital to get to a bit more of a normalized working capital situation. Now that you're 100 days in the job, would you see the need for those kind of cash outflows in the coming years, or is there an update to your thinking as it comes to the growth of a captive FinCo business in light of the quite challenging environment?
I think that's one where I would like to take the opportunity to answer that with our full year guidance, because one of the things that we want to do is actually start to, I think, increase our communication in terms of how we look at the balance sheet more holistically. I think what's absolutely fair from Richard and, in terms of how the whole company is operated is, on the one hand, I think we do want to look at having a working capital number that is, I'll say, more competitive and in line with how the industry is measuring it. So that's one you'll continue to see us focused on. In terms of specific items, whether it's the FinCo or something else, those are things that we're always going to have strategic priorities that require investment. But at the same time, it's critical to us that we are looking at how do we use that efficiently. And I think what you would expect to see from us is a very holistic conversation about what are the strategic things that help us become a leader in the BEV space, that help us continue to lead when it comes to affordability and all the drivers that help us and accretive businesses that do that. But also at the same time, making sure, I think, as we're entering an environment where the macro environment is tougher, where cash isn't free, where we need to be thinking about what's the best use of the cash we have, and do we really get the returns we want for those investments. So
Thank you,
that would
Natalie.
be my answer to that question.
Thank you.
Thank you. And we'll now take our last question from Tim Rokossa at Deutsche Bank. Your line is open. Please go ahead.
Yeah, thank you very much, Natalie. I'd have three questions, please. The first one is, obviously, you have a super interesting and extensive experience across several industries. I'm certain you had a lot of views going into this job and done your due diligence. What surprised you the most to the downside versus your expectations with all the negativity that especially investors put into the space? Secondly, just to clarify this, you already said you want to be an efficient cash flow machine. I think we all appreciate this. Will a buyback program be a crucial component of your return strategy over the next few years once this one is done? And finally, you guys always lobbied for a level playing ground and fair rules. Has the Leapmotor cooperation or anything else that happened changed your view on this potential tariff that may come for Chinese imports into the EU? Are you guys pro or con? Thank you.
Okay, I think I'm going to do those backwards, which is starting with the topic around Leapmotors and Europe and a level playing field. I think one of the things that we have said pretty consistently as a group is that if we want to win in the EV space over time, we have to be willing and prepared to compete versus the best competitors in the world. And so when we look at what's happening in Europe, our view is you are going to see the Chinese position grow in this market in some way, shape, or form. And that's a question of, is it being on the defensive and looking at how that comes at you, or in our case, it's being much more on the offensive and collaborating and seeing how we can make sure that we really address that issue in a thoughtful way. I would like to emphasize on this one that in addition to the rights to export the product from Leapmotor, we also have in the JV the ability to manufacture the product. So it is something that if we were to start to see there were issues around import duties or where things are made, that's obviously still an option for us in terms of the strategic thinking we had with that deal. The second question you had was around being a cash flow machine. I like that a lot, and that's something that matters to us as a group. I think that's one of the ways we prove our value as a business is that we're continually not just investing in the future, but we're proving what we can do on a daily basis. In terms of a buyback, too early for me to give you guidance in terms of what we want to do next year. We need to finish this buyback first. But I think in terms of how do we make sure that everyone, really is able to benefit from our thinking and how we move forward. I've heard your comment. Thanks for the input. Don't be surprised. A few other investors have given me that as well. So thank you. And then the third question, or your first one, was actually, I think, around what were some of this? Was it surprises about the company or about specific deals? Surprises about the company is what I'm getting a head nod on. In terms of since I've joined and what are things that are to the negative. And I guess what I'd say is from the company itself, I have been, I would say, only positively surprised. It's an outstanding leadership team. I'm absolutely convinced that we are doing all the right things to play into the future of where this industry is going. And the executional muscle of this group impresses me every day. When I talk about what are the downsides, I think that the two downsides I see are, the macro environment is very challenging out there these days. When you look at whether it's, wars that we're seeing in some of the regions that we're in, when we're looking at what's happening in terms of interest rates, there are challenges, and in terms of what that can potentially mean for consumer behavior, or at least in terms of the expectations bubble that I think people have as you look ahead at some of those topics. I think that's the one that I really see. And then obviously the other one is I've never worked in an industry where, to me, the investment case was so clear from the story, but the ability to have that translate into people seeing it is something that has surprised me a little bit. And I think that's just one where we're going to work at it every day together. We're going to look at how we make that more transparent, and I think that's part of my job here. And that's something that is going to be I think has the potential to be a real positive over time as we help people better understand the Stellantis, really our strengths and our strategy going forward.
Thank you very much, Natalie.
Thank you. That's all the time we had for Q&A. I will now hand it back to Natalie for closing remarks. Thank you.
All right. Well, thank you very much. It was exciting to spend this hour with you, being able to explain to you a little bit about where we are in terms of the business. I think, for me, the big call-outs as we're kind of closing this out are that we do have a focus on what does it take to be a leader in the industry when it comes to profitability, to cash flows, maintaining our momentum. And we know there are short-term challenges out there for us, but we believe if we focus on where the future is going, which is electrification and the technology transformation, then we will be in a place to be one of the winners in the market in both the short and long term. So thanks from my side, and talk to you again next quarter.
所以这是电话会议啊，我觉得其实这家公司呢是很值得考虑的啊，我会重点考虑。原因其实很简单啊，之前的很多人认为电动车会统治世界，现在看起来呢，这种预计好像是有问题，至少从速度角度，我觉得不会很快实现。那这家公司呢，在所有传统汽车公司当中，应该是管理层最有效、最稳健、最靠谱的。所以他的电话会议大概1个小时的时间。还是建议大家整体听一下。那我总结了基本上有这么5点。第一个就是他在电车上的投资。上周有会员在直播时候问到这个问题，说他现在推出了一个叫 EC3 的一个电动车，是相对低档的 B 级车，在欧洲只是23000欧元很多人担心一开始可能不盈利。我对会员的回答是，我可能觉得一开始它确实不会盈利，但是只要量产应该就可以盈利，因为这个公司一直讲他们不会亏损卖任何汽车。但 CFO 现在的正式表态比我预想的还要好，他就说我们这个产品从第一天从现在就是盈利的，将来就更盈利了。这个原因呢，他就讲了2点，我觉得比较重要，就是特斯拉这样的车没有的。他就说我们很多产品是放在一些共享的平台上，就是同一个平台也做电车也做汽油车，因此很多研发的生产的费用都是分享在不同的产品，或者是有很大的量来摊销，所以呢，这是一个很大的优势。第二个，他就是说他的公司在采购方面也是比很多别的传统厂商要好很多的，所以保证这家公司推出的电车也是很快就可以盈利的。还有一个就是分析师问到说，你的美国的那2个比较大的底特律的汽车厂商福特和通用现在都讲说电车的计划有问题看到市场上没有什么需求，因此呢他们电车的计划都要拖延但 Stellantis 就非常清楚，他说我们不会，因为我们之前的计划就是比较稳健的，因此呢我们还是按照我们的计划来不做任何的改变，不会拖延。所以这是从电车的角度。第二个呢，就讲到 UAW 的罢工，这个我们在直播中也说过几次，因为他跟 UAW 刚刚签了协议，基本上初步达成了共识，好像现在的条款是未来的合约期4年半的时间是工资会涨 25%， 然后呢会有一些通胀的补贴，所以呢可能4年半的时间工人的工资能涨 30% 左右。但这个他不太担心，因为他美国的毛利和利润都是非常高的，因此呢他不太担心增加的这部分人工成本，而且他只要增加了，其实他的2家竞争对手福特、通用肯定也是同比增加。还有呢，就是如果这3家增加了，那 UAW 肯定想把同样的，比 比如说别的那在美国生产的韩国、日本甚至特斯拉的工人都拉进工会，因此呢，这些其他的工厂为了不让工人加入 UAW 的工会，他肯定也会相应的提升他们自己工厂的工资。他们可能不会提升 25% 这么多，但是至少我觉得 20% 应该是可以的。就是说其实 UAW 这种工资的增加是整个行业通用的不是只对底特律的3家公司的。第三个非常重要问题就讲到回购，他就讲说我们公司现在账上其实现金非常多，因为他们这个公司呢是有2家公司，就是在北美的我们之前讲过 Fiat Chrysler， 然后另外在欧洲的标致，这2家公司合并而成。所以他们一开始运营的时候主要是从安全的考虑，账上保留现金比较多。现在经过2年运营之后，其实效率很高，所以 CFO 就表示他们未来呢会从账上管理来讲会着重考虑效率，也就是说他不会像现在一样保留账上这么多现金没有什么太多的用处。所以呢，他虽然没有直接讲说他的回购未来会不会大幅增加，但是这个可能性还是很大的，因为尤其是他们现在有一个小的回购，大概是15亿美金，但是15亿美金呢可能很快就花完了。那明年董事会就会面临选择。现在其实从市场来看，因为像他在内的传统汽车大家给的估值都很低，所以呢他要么就大幅增加股息，要么就被迫大幅增加回购。所以我对这个还是很有信心的，我觉得他2个都应该增加，我希望他能更多的放在回购上。那第4个呢就讲到存货，因为一家汽车公司存货如果太多是未来的很多问题所在。Stellantis 从上个季度、2季度到现在3季度，在全球的存货基本没有变化，而且这个存货水平非常健康，大大低于疫情前的这个水平。从它的订单数量来看，管理层就讲说他们订单现在能看到后面3个月的所以呢这也是个非常健康的水平。那最后一个当然就是讲到利润，这家公司一直相对讲的东西比较保守，管理层一直讲他们希望能达到2位数的利润率，但同时呢他们又想在行业中取得最高的利润率。因此呢有分析师就指出，他说你的竞争对手比如说德国的奔驰，它的利润率在第3季度是 12.5%， 那比你现在要高。你如果说你未来的目标是在行业中利润率领先，那你对现在的估计是不是过于保守？因为它现在的利润率是 11%， 所以管理层也被迫回应，我们这个估计确实比较保守，意味着说它实际的对未来的指标它不是 10% 或者 11% 的利润率，而是会超过奔驰的这个接近 13% 的利润率，所以这还是一个很大的利好。按照这些信息更新了我网盘上对这家公司的未来5年的股价的预期，我认为这家公司未来回报会非常好。我有可能在明天会做一个会员的视频，具体向大家解释一下，也可以请会员去网盘上看一下。好吧，关于 Stellantis 我们就讲到这里，谢谢大家。视频不是投资建议，谢谢，再见。